Hello everyone, welcome to LBS IAS Academy. Today we are going to discuss economics MCQs based on previous year UPSC questions through this series. So let's start our session. Our first question is, Human Poverty Index was introduced in the Human Development Report of the year. Options are 1994, 1995, 1996 and 1997. Here answer to this question is option D, 1997. The Human Poverty Index was an indication of poverty of community in a country developed by United Nations to complement the Human Development Index and was first reported as part of Human Development Report in 1997. In 2010, it was supplanted by the United Nations Multidimensional Poverty Index, that is MPI, that is released by Oxford Poverty and Human Development Initiative, that is OPHI. The idea behind this index is to measure acute multidimensional poverty across developing countries using various indicators. It was developed by OPHI with the United Nations Development Programme in 2010. It's part of UNDP's Human Development Report and is released annually. So here answer to this question is option D, 1997. Next is, which of the following pairs are correctly matched? Option 1, Dow Jones, New York, that is correct. Option 2, Hang Seng, Seoul, that is incorrect. Option 3, FTSE 100, London, that is correct. Select the correct answer using the codes given below. Here answer to this question is option D, 1 and 3. Hang Seng is the stock market of Hong Kong, not Seoul. Rest 1 and 3 are correctly matched. Dow Jones Industrial Average or Dow Jones is a price-weighted measurement stock market index of 30 prominent companies listed on stock exchanges in United States. Hang Seng Index or HSI is a free-float weighted stock market index in Hong Kong. Financial Times Stock Exchange 100 Index, also called FTSE 100 Index, is a share index of 100 companies listed on London Stock Exchange. So here answer to this question is option 1 and 3. Next is, the banks are required to maintain a certain ratio between their cash in hand and total assets. This is called, options are SBR, SLR, CBR and CLR. Here answer to this question is option D, SLR, that is statutory liquid ratio. Statutory liquid ratio or SLR is the minimum percentage of deposits that a commercial bank has to maintain in the form of liquid cash, gold or other securities. That is, apart from cash reserve ratio, banks have to maintain a stipulated proportion of their net demand and time liabilities. SLR is fixed by RBI and is a form of control over the credit growth in India. If a bank fails to maintain the prescribed SLR, it is liable to pay a penalty to RBI. Government uses SLR to regulate inflation and fuel growth. Increasing SLR will control inflation in the economy, while decreasing SLR will cause growth in the economy. RBI increases SLR at the time of inflation to control bank credit. At the time of recession, RBI decreases SLR to increase bank credit. So here answer to this question is option B, SLR, statutory liquid ratio. Next is, eco mark is given to the Indian products that are, options are pure and unadulterated, rich in proteins, environment friendly and economically viable. Here answer to this question is option C, environment friendly. The Government of India has instituted a scheme for labeling environment friendly products to be known as Ecomark. Ecomark is issued by the Bureau of Indian Standards as a certification mark for the products which are ecologically safe, conforming to the standards prescribed by BIS. The Ecomark scheme falls under ambit of Ministry of Environment, Forest and Climate Change. The scheme first saw its application in 1991. Ecomark aimed at the least impact on ecosystem. One of the purpose of the mark is increasing awareness among the consumers towards reducing environmental impacts. The mark is being issued in around 16 categories like food, medicines, chemicals, electronic goods, paper, lubricating oils, packaging materials, etc. So here answer to this question is Ecomark is for environmental friendly products. Next is, the capital account convertibility of the Indian rupee implies option A, that the Indian rupee can be exchanged by authorized dealers for travel. That is not correct. Option B, that the Indian rupee can be exchanged for any major currency for the purpose of trade in goods and services. That is incorrect. Option C, that the Indian rupee can be exchanged for any major currency for the purpose of trading financial assets. That is correct. So here answer to this question is option C. Here, Current account convertibility allows free inflows and outflows of foreign currency for all purposes including imports and exports. That is, it refers to the freedom to convert your rupees into other internationally accepted currencies and vice versa without any restrictions whenever you make payments. Similarly, capital account convertibility means the freedom to convert rupees into any foreign currency and foreign currency back into rupee for capital account transactions. In very simple terms, it means India is having the freedom to convert their local financial assets into foreign ones at market determined exchange rate. Typically, it would mean no restrictions on the amount of rupees you can convert into foreign currency to enable you, an Indian resident, to acquire any foreign asset. Similarly, there should be no restraints on your NRI cousins bringing in any amount of dollars or dirhams to acquire an asset in India. So here answer to this question is option C. Next is Economic Survey in India is published officially every year by options are Reserve Bank of India, Planning Commission of India, Ministry of Finance, Ministry of Industries. Here answer to this question is option C, Ministry of Finance. The Department of Economic Affairs, Ministry of Finance presents the Economic Survey of India in Parliament every year just before the Union Budget. This document is submitted to both houses of Parliament during the budget session. The Economic Survey reviews the developments in the Indian economy over the previous 12 months. It highlights the policy initiatives of the government, summarizes the performance on major development programs, and shows the growth prospects of the economy. So here answer to this question is option C, Ministry of Finance, Government of India. Next is which of the following gives Global Gender Gap Index ranking to the countries of the world? Options are World Economic Forum, UN Human Rights Council, UN Women, World Health Organization. Here answer to this question is option A, World Economic Forum. The World Economic Forum has released the Global Gender Gap Report 2021. India has ranked 140 among 156 countries in Global Gender Gap Index 2021. Global Gender Gap Report first published in 2006. It benchmarks 156 countries on their progress towards gender parity in 4 dimensions. That is, economic participation and opportunity, educational attainment, health and survival, and political empowerment. Over the index, the highest possible score is 1, that is equality, and the lowest possible score is 0, that is inequality. Gender equality is one of the prime goals of Sustainable Development Goals. So here answer to this question is option A, World Economic Forum. Next is broad-based trade and investment agreement is sometimes in the news in the context of negotiations held between India and which of the following? Options are European Union, Gulf Cooperation Council, Organization for Economic Cooperation and Development, Shanghai Cooperation Organization. Here answer to this question is option A, European Union. India and European Union are set to resume negotiations for a bilateral trade and investment agreement. The BTIA talks have been suspended since 2013. European Union was India's largest trading partner in goods in 2019 to 20 ahead of China and US with a total trade close to US $90 billion. A roadmap to 2025 to guide joint action and further strengthen the strategic partnership over the next 5 years has been endorsed between India and European Union during the recent summit. So here answer to this question is option A, European Union. Next is Resident India bonds were released in US dollar, pound sterling, and which of the following? Options are Japanese yen, Deutsche Mark, Euro, and French franc. Here answer to this question is option B, Deutsche Mark. Resident India bonds were foreign currency denominated bonds issued by State Bank of India to NRIs and overseas corporate bodies and banks acting in fiduciary capacity on behalf of NRIs or OCBs. US dollar, pound sterling, and Deutsche Mark were the currencies. Next is from the balance sheet of a company, it is possible to options are judge the extent of profitability of this company, assess the profitability and size of the company, determine the size and composition of the assets and liabilities of the company, determine the market share, debts and assets of the company. Here answer to this question is option C. Determine the size and composition of the assets and liability of the company. Balance sheet is a statement that shows financial position of the business. It records the assets and liabilities of the business at the end of the accounting period after the preparation of trading and profit and loss of accounts. That is, it records the assets and liabilities and shareholder equity at a specific point in time. In short, a balance sheet is the snapshot of a company's financial condition. So here best answer is option C.